Hey tech enthusiasts, welcome to the Monday edition of Tech Stocks Daily. We've got a thrilling lineup for you today. Apple stock is soaring, thanks to a refreshing 90-day tariff truce between the US and China. Could this be the calm before a very profitable storm? Shopify's shares are rocketing a jaw-dropping 14%, delighting e-commerce wizards everywhere. And we're unpacking why Leidos is catching the eyes of value investors with its strategic restructuring and impressive market performance. If you're ready to dive into the tech stock waves and uncover what's driving the markets today, stay tuned. Hold on to your iPhones, folks, because Apple is hitting the headlines today with some juicy developments. Apple is positively beaming with its stock price on the rise, leaping over 6% today to reach a dazzling $210.75. So what's causing this skyrocket in Apple's stock value, you ask? Well, it's quite the brew of international relations and good old-fashioned tech industry maneuvering. The big catalyst? A breakthrough in trade negotiations between the world's two largest economies, the United States and China. Yes, the never-ending saga that feels like a tech version of a soap opera, filled with tariffs, negotiations, and drama, has taken a positive turn. The US and China have agreed to a 90-day pause on those jaw-droppingly high tariffs, creating a ripple of relief and possibly signaling smoother sailing for global companies, especially tech behemoths like Apple. With its significant reliance on a China-centric supply chain, Apple stands to benefit immensely from this development. Approximately 90% of iPhones, and we're talking about those sleek, shiny gadgets most of us can't live without, are assembled in China. Manufacturing MacBooks and other Apple hardware also taps heavily into China's rich tech infrastructure. Imagine trying to uproot all that. We're talking an estimated $30 billion just to move a fraction of it back stateside. Apple has been feeling the pinch from tariffs for a while, with the threat of even tougher measures in the mix. The recent de-escalation of trade tensions comes like a cool breeze, melting away some of that pressure. The 90-day suspension slashes duties on a wide range of goods, from 125% down to a manageable 10%. That's like finding out all the calories have been removed from your favorite dessert. This ease in the tariff landscape means Apple's manufacturing partners like Foxconn and Pegatron get a break too, which keeps costs down and helps maintain those sweet profit margins. Not only does this situation offer financial relief, but it also restores a bit of steadiness in operational maneuvers within China, an area responsible for a hefty 18% of Apple's revenue. You can practically hear Apple execs breathing sighs of relief at this boost in operational climate and consumer confidence in one of their largest markets. But wait, there's more. Here's a layer of intrigue. The ongoing dialogue Tim Cook reportedly maintains with former President Trump seem to have some bearing, serving up a sort of political safety net. Therefore, anything ensuring Cook's Apple's gears continue working seamlessly gets the shareholder thumbs up. Now, while analysts like Wedbush's Dan Ives offer optimistic forecasts about Apple's future, it's worth mentioning that some are comparing how other tech stock giants like Meta are faring against this backdrop. But that's another spirited tea party we'll brew soon. In summary, the mixture of strategic trade breakthroughs and effective company leadership has provided Apple with the perfect opportunity to shine brighter in the ever-competitive tech cosmos, delighting investors in the process. Apple's recipe for overcoming obstacles and maintaining tech sector sparkle looks rather deliciously promising. Wow, Shopify is really making waves today, and it's all about a delightful dash of easing tensions on the global stage. So grab your most chilled virtual glass of lemonade and let's break it down. First things first, Shopify saw a significant bounce in its stock value, shooting up by a juicy 13.89%. Why the sudden leap, you ask? Well, it all ties back to some much-needed relief between the US and China regarding their infamous trade spat. The Trump administration announced some promising updates. For the next 90 days, import tariffs on Chinese goods are set to lower from a hefty 145% to a slightly more breathable 30%. Meanwhile, China responded by slashing its tariffs from 125% to a mere 10%. This reduction spells a whole lot of saved nickels and dimes for businesses, and that's undeniably music to Shopify's ears. Shopify, the e-commerce darling, supports a veritable alphabet soup of businesses, from passionate small enterprises to giant juggernauts. Tariffs have been like a tight, uncomfortable shoe for these businesses, straining wallets and widening economic uncertainties. When Donald Trump's team signaled a trade cool-down, Shopify's stakeholders probably heard a collective sigh of relief from their merchant base. And why does this matter so much, you ponder? The answer is found between the numbers. Around 13% of all goods imported into the US are from China, making them a substantial cog in the e-commerce machine. Any wrinkles in this fabric could easily crumple Shopify's seamless user experience. With these tariffs reduced, both Shopify and its users can breathe a bit more easily, potentially setting up their businesses for much sunnier prospects. Adding sprinkles to today's announcement, we shouldn't forget Shopify's recent stellar performance, reporting a near 27% rise in sales to $2.4 billion in the first quarter. Their gross merchandise volume also ballooned almost 23% to $74.8 billion. Today's trade news adds a generous spoonful of gravy to Shopify's hearty plate of success. But don't get too comfy just yet. While pleasantries between the US and China are percolating, a permanent resolution is yet to emerge. That said, Other trade negotiations around the globe also demand our attention, since they share the stage in this economic soiree. So, stay tight, Shopify watchers. Keep those browser tab highways open for any subsequent updates, both from the Shopify booth and the International Trade Coliseum. It's just the beginning of an exciting narrative in which e-commerce stands center stage, dressed in optimism. With this, Shopify continues to strut its stuff down Wall Street, keeping investors on their toes, but clearly for all the right reasons today. All right, folks, let's dive into why Leidos Holdings Inc. was buzzing in the tech news today. If you're looking to beef up your investment portfolio with a stock that's getting lots of attention, Leidos might just be your new best friend. First off, Leidos is popping up in discussions about value investing. With a Zacks rank of number 2 and an A grade in the value category, the company is looking attractive for those of you who love analyzing those key financial metrics. Leidos has a promising PE ratio of 14.30, much lower than its industry average, which means it might be undervalued. It's like finding a pristine gaming console during a Black Friday sale. Who doesn't like getting more bang for their buck? The history lesson continues with a tale of $1,000. If you'd invested $1,000 in Leidos a decade ago, it would now be worth $3,645.52, translating to a gain of over 264%. That's some serious wallet expansion, isn't it? Leidos has outperformed the S&P 500 and the price of gold in the same period, because who needs boring rocks when you've got tech stocks? Leidos is doing some housekeeping, shifting gears by aligning its business segments into national security and digital, health and civil, commercial and international, and defense systems, each bringing in solid revenues and ensuring they're ready to handle anything from cyber snoops to the complexities of modern health IT. Way to adapt and thrive, right? Now, it's not all rainbows and butterflies. While their earnings and revenues have surpassed expectations, Leidos faces some headwinds. Supply chain issues and a shortage of skilled workers in the aerospace and defense industry could prove challenging. Also, tighter U.S. exportations. Regulations around exports to Russia present another knot worth untangling. So they've got some puzzles on their hands, and hey, who doesn't love a good mystery to solve in the tech world? All right, tech investors and enthusiasts, what do you think about Leidos stock? With its proven growth record and solid value metrics, is it tempting enough for you to take the leap, or is there a dragon in the numbers somewhere? Scroll down to the comments section and let us know your thoughts. Do you see Leidos as a grandfather clock that keeps ticking reliably in your investment timeline? Or is it more like a futuristic smartwatch that keeps flashing new notifications at you? Get typing, because I'm keen to hear what you all have to say. And remember, your thoughts might just glow up in our next video segment. Oh, it's ticker time with Apple, the shiny jewel in today's tech crown. Given all the trade whispers and outlooks, would this be a good time to reshuffle, hold tight to your treasures, or snatch more of this stock magic? Here's why Apple is standing out today. With its stock skyrocketing over 6% and nudging its way to a dazzling $210.75, thanks to some much-needed trade soothing between the US and China, it's knocking socks off in positive territory. Let's put Apple under the microscope. The groundbreaking 90-day pause on tariffs is like hitting pause on a disaster movie at its most tense moment. We all need a break. Given that Apple's iPhones, MacBooks, and more rely primarily on a Chinese assembly line, this development sprays a social media-approved positive glow all over Apple's complex cross-border supply operations. It not only swerves around potential cost crunches, but breathes life into its profit margins, making everything seem way sunnier. So, to play the stock game as Apple headlines its thrilling episode, today's good vibes might suggest a solid hold recommendation. The 90-day breather from tariffs offers breathing room and stock stability. While the trade ceasefire is music to Apple's ears, pushing the buy button depends heavily on daily ice cubes, or updates, as significant challenges still loom. But, and it's a big but, remember that the market is as volatile as my morning coffee hits. With Apple's ongoing leadership, diplomacy, and skill in dodging potholes in the tech autobahn, keeping Apple embedded snugly in your portfolio might just align with your dreams of tech dominance. As Apple rides this wave of encouraging news, it's like having a map to treasure, with X marking the spot at China relations. While today's charts are stellar, always loop around for your own research, check your compass, and assess your financial forecasting goals, because what categories is good today might just pivot after sunrise tomorrow. Today's tech market was like a fireworks show with Apple, Shopify, and Leidos all stealing the spotlight. Apple stock surged over 6%, energizing investors with the trade truce between the US and China. Shopify cheered with almost a 14% bounce, thanks to tariff reductions that promise a brighter business climate for e-commerce ventures. Meanwhile, Leidos impressed value investors with its strong financial performance and promising restructuring, even as it navigates industry challenges. It's a thrilling day, setting the stage for lots of excitement and potential opportunities in the tech sector. If you enjoyed today's rundown and want more high-energy tech news goodness, go ahead and tap that like button. And if tech tickles your interest every day, don't forget to subscribe for your daily dose of tech tidbits. Share this video with your squad so they can join in on the tech vibes too. And make sure to swing by tomorrow as we dive into another fabulous day in the tech world.